Kushlani ji.
Ji. On behalf of GSTPAM, I welcome you all. Today we have with us a learned speaker, CA Premal Gandhi, who is going to speak on COVID-19 presentation of financial statement. I thank you all for joining this webinar. Now I request Advocate Sejal Shah to take charge. Thank you.
Very good morning, everyone. Now we have Hiral Shah who will introduce our speaker for today, CA Premal Gandhi.
Good morning, friends. Premal Gandhi, Premal Bhai as I call him. Mr. Premal Gandhi is a chartered accountant and a commerce graduate from Mumbai University. He has qualified as a chartered accountant in November 2001. He joined Deloitte Haskins and Sells in April 2002 in the audit division, continued serving there till October 2006. So a big four, big experience. After an approximate 4-year career with Deloitte, where he audited large corporations in India as well as abroad, he started his independent practice. He specializes in the field of statutory and internal audits for MNCs, listed enterprises, and startups. A firm believer in networking, he has been able to transform the firm from a proprietary concern offering single traditional service line to a full-fledged firm offering a suite of services beyond statutory audit. He possesses the ability to convince people with sincerity, with and without out-of-the-box approach to the problems. Currently, he is the managing committee member of our own GSTPAM. He was the ex-convener and governing board member of the Matunga CP Study Circle of WIRC, core group member of IFRS Study Group of WIRC, committee member on the IND-AS committee of the WIRC, regular speaker on IND-AS and WIRC branches and study circles, regular speaker on the Companies Act, bank audits, and various other topics of professional interest at WIRC branches and study circles. With this brief introduction, I would welcome Premal Bhai. Welcome, sir. The stage, I would say, is all yours. Please enlighten us.
Thank you so much for this full introduction. I think I don't require this. Ultimately, it's our association, and we all are professional colleagues and brothers. Obviously, to start with, COVID-19, as they say, has dramatically changed the way we think, we work, and how we live. The entire life has changed, and so that's where the biggest change has come in, I guess. So just to start with, obviously, we have still to come out of the lockdown. Obviously, there are some relaxations which have come in since yesterday, which may be applicable for tomorrow. From day after tomorrow to some of the parts of the country. To what will happen in Mumbai, nobody knows as of now. But obviously, things will not remain the same as what it was a couple of months ago. And its impact will also come not only on our lives, but on the financial statements also. So I would like to present a few of the thoughts which will come, where our financials will get impacted in the coming months and year also. Just to start with, my first major change, or the biggest change, if I could say, is will be the complete change in the environment that we are having currently. I mean, obviously, the first lockdown, if you look at it from a different perspective, the lockdown was where we were not allowed to go out. I mean, in Bombay, I know it is still not allowed, or it will not be allowed post third also. But moving from the first lockdown to the second lockdown and maybe the third lockdown, things have dramatically changed. And so concepts of social distancing, sanitization, health have undergone a dramatic change. But the moment we start going out, moving forward, say a month or 2 months from here in, I see obviously we will be having social distancing, we will be allowed to move out. But what happens post that? I mean, obviously there has been a complete disruption in the business. Businesses have been shut, so everybody will start to move. But couple of months down the line, once we stabilize, I see this as a big opportunity for India, if provided we are able to accelerate the following, make in India, or make our labor cost intensive, I mean cost effective, if I may call it as. Most of our clients that we are talking to have been saying that today, if they were procuring materials worth 100 from China, tomorrow they will definitely be looking at alternatives. And that's what is the case with our abroad clients also. Majority of them are now saying that if to suppose we were procuring from China, we'll definitely look at alternatives. And I see India coming out as a big hub for manufacturing in the coming years. It's a big opportunity. It depends where we want to and how we want to go. But the biggest thing is that yes, there is a complete change in the way we were thinking, we were working. Couple of months ago, I mean, we did not have the time to do things. But today, if we if we could not do things that we ever wanted to do things, and I think the question of time is not there. The question of discipline is there now, and that's where I guess we need to improve. The other important aspect before we start the financial statements is that due to this change, even we will have to go back to the basic aspects of life. We are forced to go back to our basics and our issues of or our luxuries, necessities, comforts. The definitions itself we have to revisit. Similarly, we will have to revisit our basic accounting principles, which is accrual, consistency, conservatism, cost, full disclosure, matching, reliability, going concern, revenue recognition. All this will have to be revisited under this post this lockdown opens and we start going to back to the presentation of financial statements for March 20. So just to take it way forward, what we have done is we have tried to prepare a balance sheet, the normal balance sheet, and provide a portion, give you a risk weightage as to where the maximum impact would come in. We made 3 areas: 1 high, 2nd moderate, and 3rd low. These are the areas where there could be maximum change due to this COVID-19. 2nd row shows where there could be significant changes, but yes, there may not be much. And 3rd is where there could not be major disruptions. So obviously, cash and other bank balances obviously will not go a major change. The only aspect that needs to be looked after from an auditor's perspective is obviously we were auditor as well as management used to have cash verifications as of the year end, which is 31st of March. But since we had gone for a lockdown from 24th of March, obviously those cash verifications could not be done, and therefore from as on 31st of March there will be no cash verifications. But yes, we could do subsequent year-end testings, and that is where your SA 701 and 7501 will come into picture. Again, the next important is inventory, and I will come down to a separate. I have a separate slide on inventory, the impact of COVID on inventories. But this, if I can start saying inventories, trade receivables, loans, investments. All these categories are the ones which will have severe impact due to this COVID-19. And this will lead to a huge liquidity crisis, because again, these are one of your major receivables. And due to these constant disruptions in the supply as well as collections, this entire bunch has gone for a toss. You will have other financial assets also, like deposits or other, which may undergo a substantial disruption or change, and therefore we have allocated moderate risk weightage over there. Current tax and deferred tax. Your deferred tax workings will completely change, or the way you look at the you assess the deferred tax asset which is lying in your books as of 31st of March will have to undergo change, because the underlying assumptions and preparations have completely been removed. So accordingly, there could be a moderate change on the deferred tax. Since a lot of these assets are not being utilized, or have been, a lot of plants have been asked to shut down, your property, plant and equipment could have a lot of impact. Intangible assets will have a lot of effect, and therefore there is high risk moderate over there. Since your receivables are already under the high risk category, the consequent effect will be that your liquidity will come into huge turmoil, and therefore your financial liabilities consequently will definitely have to have risk weightage. It will depend if why the reason of keeping here moderate is that it depends upon your risk profile. If you are debt heavy, then obviously it will be high risk. If you are asset light, or maybe you have cash at hand, then obviously it will become moderate or low. So depending upon each and every scenario, this risk weightage will keep on changing. Provisions, yes, you will have to make. We will come to this in the subsequent slides, but there will be a lot of provisions to be made because of this uncertainties that we are going through. Lastly, coming to equity share capital, obviously there is no change, but yes, other equity, because there will be a high change in that other equity, because your profits will be impacted severely due to this lockdown. And going forward, you could also have businesses incurring huge losses, or having to shut down because of unavailability of demand or supply. So we go back and go to the next slide, which is your inventory line by line. Inventory measurement. Here, what will happen is that your inventories which were there as on 24th of March, and by the reason of saying 24th March is that most organizations had to shut down from 24th of March, or those which were providing essential services till 31st of March. Their inventories values will have to be reduced or brought down to the net realizable value, because as the standard very clearly says that it has to be recognized at cost or the net realizable value. And therefore you could have entities which will have to write down inventories, not only because of reduced movement, but lower commodity prices or inventory obsolescence or lower overhead cost. And I'll just like to give you an example over this lower overhead cost is that as most of us know, we are basically, we would have gone through the costing where an allocation of overheads is done. During this lockdown period, obviously a lot of these plants and other admin offices were closed, and therefore the overheads are reduced. Now, do we allocate this overheads over the inventory? The standard says that obviously if the plant as well as the admin overheads are not included, then obviously they cannot be added over to the inventory cost, and to that extent the inventory value will have to be reduced. Therefore, and the entities will have to assess its impact on the write down and write down of inventories, and we'll have to revisit the impact as on 31st of March. If in any case it cannot do it, then obviously it will have to disclose appropriately. I have tried to prepare, give you some examples. Obviously, there is no relevance with any of the names that are being put over here. They are just a figment of our imagination. The idea is that obviously we are trying to cover the examples. Majority of this will have some relevance to the clients that we have, and therefore maybe the examples used over here are relating to one type of industry, but the same principle will hold good in different industries also. And I'll read out the example. BONGC Limited is the business of exploration and production of oil and natural gas. It holds substantial inventory at the year end. What will be the carrying value of inventory as on the year end? The reason of this is that, as most of you are aware, that oil and natural gas has lost a lot of its value due to, as of the year end, because of the lower commodity prices and due to non-availability or absolutely no demand of the oil. Obviously, this company is in the business of exploration and production, and therefore they would have substantial inventory as on hand. But obviously, since the market value of that has been reduced, and as on 31st of March, there is no choice but to reduce the value of inventory at hand on 31st of March. Similarly, for the second question, Unilever manufactures a product called Laggy. The cost of production involves allocation of factory overheads and office overheads of rupees 4 and 6 based on approved cost sheets. During this lockdown period, the company plans are shut down. What will be the impact of overhead allocation during this? I've already covered this. So just to add, obviously, this cost sheets were approved based on some fundamental workings of the earlier financial years. Each company will have to assess the impact not only for financial year 1920 as well as for 2021, because the impact for financial year 1920 could be restricted because this in city like Bombay, the practical lockdown started around 15th of March, but the actual lockdown in the entire country started from 24th of March. So the effect would be anywhere between 7 to 15 days of in the entire in all of our clients, whereas the impact will be much bigger in financial year 2021 because practically we've lost minimum 1 month as of now while we are talking, and you would have definitely seen the announcements that are being made by each company regarding, especially in the automobile sectors, where some of them have come and said that we've not been able to sell a single entity, single unit in the month of April. So each company will have to assess, or each entity will have to assess the impact of this inventory in a case-to-case basis, and that's where probably our role will be very, very high as advocates, chartered accountants, tax consultants, as business consultants, to help them assess the impact. Next, the second major area of impact would be trade receivables, loans, investments. Obviously, since it is generally said that every rupee that you earn or every rupee that you expense moves 6 times minimum, because you give it to somebody, somebody gives it, you pay to your suppliers, supplier pays to his ultimate supplier, and the chain moves on. So average 1 rupee moves minimum 6 times. Unfortunately, due to lockdown, what has happened is that the receivables have been completely stopped and the liquidity has completely stopped, and therefore this has resulted in a disruption of the economic activity. People have, their loans or in receivables have not been able to collect, and therefore have not been able to pay to their suppliers, which has increased the risk of defaults. Also in respect of loans, there will be other issues of underdrawing of limit, loan commitments, which will impact the credit risk parameters and also bring a lot of change in the collateral and business cash flows, because your collateral values which are given will have you would have given stock as well as debtors. Obviously, the stock, as we discussed earlier, will have to be written down, and therefore the value of the stock will go down. Whereas, and the debtors which are given as collaterals, realizability of those debtors again will become a big question mark. So there could be a lot of turmoil on the existing banking facilities that you are using. What will happen in case of investment is that there could be a decline in the market value of investments, as most companies are making current investments. There will be a very imperative need to look at how and how, as well as recognize the impact of these investments, change in the market value of these investments, and I'll come to that. In case of financial assets such as trade receivables, loan, you will have to definitely look into the AS4, which is your contingencies, events occurring after balance sheet date. The standard very clearly says that if you have an adjusting event, which is a condition which exists on the balance sheet date, and COVID-19 is a condition which was existing as on 31st of March 2020, and therefore all your events subsequent to 31st of March 2020 till the date of signing of balance sheets will have to be scrutinized in greater detail, will have to be looked after, and ensure that you incorporate them on the events, on the items which are prevalent on 31st of March. In case of investments also, you will have no choice but by AS, as per accounting standard 13, which is the accounting for investment, you will have to make a suitable provision in the decline of investments which you have made as of 31st of March 2020. In respect of banks, NBFCs and insurance, there'll be, as I earlier said, there'll be a lot of stress, and obviously the borrowers will have to be classified into standard, substandard, doubtful or loss categories. Obviously, the Reserve Bank of India has come out with 2 circulars on 27th of March as well as in April to address some of the liquidity challenges. But still, given the fact that there will be substantial changes happening in the loan covenants or defaults happening post this extension of the moratorium given is which has been given by RBI in the to all the loans gets over, because though the loans have been the moratorium is given till June 2020, you could see that since there will be a liquidity challenge and your credit risks would have been undergoing a dramatic change, therefore post those periods till the date you actually sign the balance sheet, you could have your clients which could have loan defaults, and then you may have to make adequate provisions guided by AS. We will come to the next slide on to look at this. So under Ind AS, obviously you have to measure your financial assets and liabilities at fair value, and the resultant gain or loss have to be recorded through profit and loss or through other comprehensive income. Obviously, there is a, as we all know, all the investments have and their underlying instruments have gone through or have been values of fair value of those investments have been reduced. But then how do we determine the fair value? Obviously, a lot of professional judgment will have to be required, as well as a lot of valuation techniques will come into the picture, like discount rate, credit spread, or counterparty credit risk, etc. Obviously, under AS, which is your normal accounting standards, how do you determine the fair value of the investments which are held as on 31st of March? The only way is to book the resultant gain or loss through the profit and loss. And in most cases, there has been a reduction of value of the investments rather than gain. And just like we've tried to give some examples to bring out the concepts. Bhotilal Financial Services is having investments in mutual funds. The NAV of all mutual funds have been reduced by 25% as on 31st of March 2020. How does it recognize these investments in its financial statements? Unfortunately, it will have no choice but to recognize the loss uh, on this investments through its profit and loss as on 31st of March 2020. There could be obviously post 31st of March 2020 till your date of balance signing of those balance sheets. Again, the investments may come back to its the inherent value or fair value of this investments may come back to its original price. We never know because it's a market forces which will determine the value. But as on 31st of March, yes, it has happened. And as if on the date of signing of balance sheets, there is no change, then obviously you have no choice but to recognize this loss in your books. Secondly, you could have credit risk also. An example is MyBulls Finance Limited has granted loans to Muda Limited, a real estate developer, as project loans, as structured project loans based on credit profile of Muda Limited. The credit profile of Muda has subsequently been downgraded. How will MyBulls recognize the loans? You are a business consultant of MyBulls Finance. Unfortunately, what has happened is MyBulls had given loans to its borrowers. The credit parameter or credit risk of borrowers have undergone a dramatic change. Their credit ratings have gone for a toss because of the liquidity. Your availability of cash flows or your collection cash flows will go a dramatic change, and you will have no choice but to recognize the losses due to credit risk and pass reduce your value of inventory in your value of investments through the P&L. One of the third or major areas where impact would come in, and that is where a lot of discussion is going around in newspapers, in social media, everywhere. What happens to leases? And just to give a small example, I was talking to somebody yesterday who's part of a big firm of chartered accountants, and they are saying, or their clients are saying, that now do we require such a big commercial establishment given the fact that we are working from home? If you looked up, if you would have seen social media also, you would have seen somewhere where a listed company has come to say that even if everything becomes okay, for the next 2 years, we see 75% of our staff will be working from home. The question is whether 75% or whether 50% does not make a big difference. The numbers may keep on changing as we keep on assessing the impact of COVID. But obviously, yes, what has happened is that the availability of or the requirement of commercial space and the way we are got used to working from home, or the concept of working from home, which has brought in India, will have a huge impact. I mean, to digress from this point, earlier we were having a lot. We never used to have such kind of webinars a couple of years ago. Now, unfortunately, we don't have a choice. But yes, we've got used to it, and obviously, will we require to do seminars like we used to do earlier at having at one location? I seriously doubt that. I mean, the way we have got hooked to webinars, I see a lot of demand for the webinar to continue for the even post the September 2020, because by that point of time, I think things will start stabilizing. So a lot of lease rentals or commercial lease rentals will go for a toss. Obviously, the lessees will have to assess the right to use and test for impairment. As auditors or business consultants, you will have to check the values which are being carried forward on the financial statements. Obviously, there will be impairment indicators, and like it is often said that the best way is to test for an impairment for an auditor or for a management. Obviously, we are supposed to test for impairment every financial year, and this being obviously no different, the greater reliability will come over there. There will be another pressure on the lessors to evaluate whether the underlying assets has got impaired due to decreased demand. You could have a lot of these scenarios where a lessor or lessee may renegotiate the terms of lease as a result of COVID. A lessor might provide relaxation in compensation, or a lessor may receive compensation from government. What happens if the lessor receives compensation from government? Whether it will be accounted as a government grant, let's look at it. Obviously, there is a news article which has been coming over the last few days, is that some Ministry of Information and Technology has decided that small IT and ITS offices which are already registered in the STPI will have exemptions, not pay rentals for the period March 2020 to June 2020. The reason being due to the lockdown. Now, obviously, how do they recognize this in the financial statements? The important issue over here is to look at it from a perspective of Accounting Standard 12, which is your government grants, recognition of government grants. Since this has come from a government and it is in the nature of for compensation of expenses, you will have the management will have to recognize this as a government grant and offer it as an income also. So just to answer the example which we have tried to give over, I mean the question which we have raised over here, the treatment will be that it is in the nature of government grant and therefore it maybe have to be recognized as an income. So I touched upon impairment, and just to give you an example or just to highlight what is impairment. Impairment is nothing but basically the recoverable amount of an asset minus the carrying value which is there on the financial statements. Recoverable amount is, what is recoverable amount? Recoverable amount is the higher of fair value less cost of disposal or value in use. So just to give an example, if you have an asset which is lying in your books at 100 rupees, today it is valued at 80. So you have no choice but to impair it by 20 rupees and take it as a profit and loss item, as a loss in the profit and loss. Typically, you will have to impair on all non-financial assets like goodwill, property, plant, and equipment. You will have to test it as on 31st of March. Obviously, what will happen is that since we will be testing it post 31st of March, what we need to look, some of the factors that we need to look is contraction in the economic activity, assumptions used for impairment testing and determining recoverable amount, assumptions to determine the discount rate, as well as the budgeted forecast and future cash flows. A lot of professional judgment will come in determining what are the future cash flows. We'll have to be, as auditors, we will have to apply a lot of professional judgments, because ultimately there is a huge risk on the auditors and huge pressure on the auditors to recognize that the fair values are recorded in the balance sheet of all the assets. So the auditors will have to be very, very vigilant, if I may call it as, for look out for impairment indicators. There are a lot of impairment indicators as on while we are speaking. So the impairment testing of the non-financial assets will have to be done with greater vigilance. I've already taken up impairment, so I'll just touch upon it. If you have goodwill, obviously you will have to look at goodwill and see whether you need to actually carry goodwill now on your balance sheet. It may have to be completely impaired. It would have completely impaired and therefore will have to be written off. One of the reasons why we have given over here this small illustration is that obviously for bigger businesses there will be some relaxations coming in, some support coming in from various quarters, including the government. But it is the small business fellows who will need a lot of support, and I don't think a lot is being done on those aspects. But obviously we have to live with the environment that we are in, and therefore the impairment for small businesses could be much higher. Obviously, we come to the next category, in which is your property, plant and equipment, which is nothing but the fixed assets. Obviously, as management has to verify the useful life and the residual value of each of the assets and charge depreciation on a periodic basis to ensure that the carrying value of the financial asset or the PPE is recorded. Generally, the Companies Act have suggested that this estimation of the useful life as well as the residual value of the asset be revisited at the year end. Obviously, the underlying assumptions of the useful life as in the residual value have significantly been altered. Some of the assets may no longer be required, or the residual value would have dramatically changed, and therefore the charge of depreciation which you may have to take in the financial year 1920 as well as financial year 2021 would undergo a dramatic change. Due to this COVID, your assets may be underutilized or suspended. However, you will still have to keep on charging depreciation to the income statement, even though the same has not been utilized, because the standard very clearly says that where there is temporary underutilization or suspension, you still need to continue with your depreciation and no relaxations can be given. Obviously, we come to the next important aspect, which is your provisions. Obviously, the Ind AS requires you to make provisions for onerous contracts, restructuring, as well as insurance. I'll just like to add some of this in a very short way. Onerous contracts are those contracts where you have the cost of going through the contract is much more than meeting the obligation of the or receiving the value from the contract. And you may have many of many of our clients will have many of these contracts where even during this lockdown they don't have a choice, but they have to meet those contracts because the costs of transportation or otherwise would have significantly increased. Yet to supply, they will have to keep on going, and therefore this additional cost would have to be recognized. Restructuring would also have to be taken care of. There may be some dismantling or some other restructuring plans will have to be implemented. In fact, the government has come on to say that all the plants that have restarted have to ensure that they provide additional transportation to the staff and maintain adequate hygiene, sanitation, and social distancing. Obviously, each of this entails cost, and therefore all this cost will have to be provided for in the financial statements. Next is insurance claims. Obviously, a lot of businesses have insurance policies, where you have loss of compensation taken care of. Majority of the insurance companies have come forward to say that COVID-19 will be taken care of in the existing policies. But what as managements as well as business advisors and auditors will have to verify, check, is that these claims need to be acknowledged before, or there is a virtual certainty before it can be recognized in the books of accounts. And therefore, once these claims are filed and acknowledged as on the date of signing of balance sheet or date of presentation of the financial statements, then obviously you can record them. A mere fact that it has been lodged with the insurance companies, the accounting standards do not allow you to recognize these claims. And to that extent, each of one of us will have to be very vigilant, because obviously the managements may try to recognize this in their financial statements over a point of time. Obviously, as I've been saying, under the AS also there's similar requirements for provision. And I'll like to give you an example of on an onerous contract, so where you will have to deliver goods even though the customer may not be able to pay it, or under a government law you will have to supply something even though you may not get any money for the same. And a classic example is from one of our clients. They are having a hotel in Mumbai. The hotel has been taken over by BMC for quarantine purposes, and as well as lodging of the COVID workers. I mean, we salute the health officials, the paramedicals, the doctors, the nurses, but just to provide them support, the government has taken over this hotel. Unfortunately, what has happened is the management has been told that till when this possession will remain with BMC, there is no guidance. The management is also told that at this point of time, we are not providing you any guidance as to whether we will provide you any compensation for the rooms that we've taken over from you. It has also not been given any guidance as to whether the expenses that they are incurring in form of electricity or other municipal taxes, whether that will be at least reimbursed. No guidance has been given as of now. No guidance has been given as of now as to when the complete possession of the hotel will be given back to the management. So obviously, obviously in this crisis, there is no choice but to recognize the provision for expenses, and there will be an obligation to Sejal.
Yes, Premal bhai, just can I announce something?
Yeah.
Yeah. All the participants, those who want to ask questions, there's a question tab on the right side of the screen, so you can post your questions there and handout. You can also visit the handouts. We have already handouts there, so you can check the presentation and the other Excel file also, which Premal bhai has enclosed. Yeah. Thank you so much. Continue.
So just to add on what Sejal has said, I have shared the guidance note which has come from the institute on the impact of COVID-19, and also one of our study groups in the regional council, I mean the WRC, had prepared from the listed accounts. What they have prepared is a list of the disclosures that have been made by various companies that have already announced their results for 31st March 2020, as well as the auditor's report, impact of auditor's report. So both things have been shared with the organizers, and therefore that has been passed on as handouts. Just to come back to the provisions, uh, so similar provisions will have to be done by each of the managements, and then and we will have to revisit the or look at each contracts or each developments with the minute detail. Coming to the next part, deferred tax asset. Obviously, if any deferred tax asset is recognized as in the books of accounts, the same will have to be reassessed as of 31st of March 2020, and the future cash flows or future forecasts of the entity will have to be done, and the reversal of deferred tax assets may also have to be done, and as on 31st of March 2020 and in the future periods also. So we come to one of the principal biggest accounting principle and underlying presumptions, if I may call, to any financial statements, and which is going concern. It is an inherent understanding that obviously the accounts are prepared on a going concern basis, but there have been scenarios, or this lockdown may have created scenarios, business disruptions, where the entire business may have to be shut down, not for a temporary period, but for a prolonged or a complete period, or there may be a complete shutdown. And then the auditors or the managements will need to look at this fundamental assumption of going concern and make necessary disclosures in its financial statements. Obviously, it is very critically important for auditors to assess the same, given the current threat of liquidity and these disruptions in demand and supply. For the auditors will also have to see the financial statements for the and cash flow generation for the next 12 months while looking at going concern status of the entity. The next important is borrowing cost. Obviously, a lot of clients will have made investments in qualifying assets or capital work in progress, as we largely know them. And generally, majority of this is against a term loan or maybe some other loan taken to create these assets. Now, generally, what happens is, obviously, though RBI has been very vigilant enough to say that term loan, there is a moratorium on the term loans which are outstanding as on 1st of March 2020 till June 2020. We need to also look as whether the capitalization of the borrowing cost will cease during this period. The entity will have to apply a lot of judgment to determine whether it can suspend capitalization of borrowing cost or the expected length, depending upon the expected length of lockdown. If you look in consonance with the type of projects like construction, land installations, infrastructure projects, there is a big value which is there as borrowing costs, and therefore we need to be very vigilant in recognizing the same during the period. Next, we come to two other aspects. One is your internal controls over reporting of financial reporting. Obviously, a lot of this internal controls have either been modified or will undergo substantial modification. Managements will also have to look at alternative controls. And just to give a small example, I mean, as I said earlier, work from home was never practiced in India so prevalently, but that has become, in fact, the government has been coming very vividly to say that please practice work from home wherever you have to. Though in the lockdown 3, They've said that private establishments could start with 33%. Yet they are advocating that wherever possible you work from home. And just to the controls, internal controls for reporting of financial statements or financial reporting processes have been dramatically changed. Now you are being allowed to use your personal laptops or modems or network with adequate security by the company, which was not being done earlier. Um, Obviously, the other change that has taken place is in employee benefits, and this is one area where, I mean, though the government has been regularly saying that we need to ensure that no salary cuts are done or no pay cuts are done, yet most entities are coming to a point due to liquidity challenges that how do they pay off, even if they had the intent, how do they pay off the salaries? There is no way to pay the salaries. Obviously, what the standard says that where there is a revision in the pay cuts or defined benefits, any defined benefits like gratuity, leave encashment, the same will have to be revisited. The actual valuations done at the year end for valuation of defined benefits under the standard, which is yes 15, will have to be suitably downgraded, or your actual valuations and discount rates will have to be downgraded. And obviously, an example of this is that Reliance Limited has decided to have a salary cut for its top executives in a division. It also estimates that employee benefits and related payments will have to be proportionately reduced. How will you recognize the same? So this will result in the defined benefit contributions being lowered, and to that extent, a provision being reduced or to capture the change in the um, reduction of the defined benefits. Obviously, this will increase in the profit, but obviously then this is not what is thought forward, or this is not the best way we could have it. So what is the major area, or what is the major thing as business consultants, advocates, practitioners need to look at? I've already covered a portion of this earlier, where I've said since this COVID-19 is an adjusting event as on 31st of March 2020. From here in till the date of signing of balance sheet or state presenting of the balance sheet, we will have to investigate into the conditions which existed on the balance sheet date. And that is why, as auditors, we will have to apply a lot of professional judgments. The concept of audit materialities will have to be revisited. Audit evidence will have to be revisited. A lot of the audit evidence will have to be corroborated by way of third-party representation letters, maybe comfort letters from holding companies, balance confirmations from banks or third parties. So we will have to constantly hold our hands of the clients and constantly talk to the management to understand, I mean, what is happening, where are they, how are they trying to cope up with the disruptions, so as to ensure that the impact of COVID is properly recognized in the financial position or the financial performance of the entity. Obviously, from the herein, as I have said, post the moratorium and ends on interest cost on 31st in June 2020, you could have a lot of these clients, and we have substantial clients which are saying that today we have opted for moratorium simply because we don't have liquidity or there is no realization. But I don't know how will I pay those loans in the month of June when they are due, because technically these loans have to be repaid in June, July or thereof. And the biggest issue at this point of time for clients is that they don't have a clear picture on the cash flows, on the realizability of their cash flows, and therefore events occurring after the balance sheet date will have to be looked in with a magnifying glass, if we call it as, um, to ensure that we recognize or we record the actual financial position in each of these financial statements as on the 31st March 2020. The auditors obviously will have to satisfy themselves that these financial statements are free from material misstatements, either caused by fraud or error. Because as auditors, obviously your responsibility increases and it never decreases. So obviously you will be placed on greater reliance, and to ensure that this financial statements, there are no material misstatements in these financial statements as on 31st of March 2020. There is obviously what is required will be disclosures, disclosures on other information also in the management analysis and representations. I have in this other information, what you have to ensure or you disclose the risk associated with this outbreak. Also, you will have to give commentaries as to how you have taken remedial action and what is the impact on each of the business business areas in the financial statements. You will have to disclose the policies and procedures and how do you address your credit and liquidity risk. Just to add this, we also in the handouts given the some of the disclosures that are made in the other information by the listed companies that have come out with some of the results. So you could use a portion of, or your clients could use a portion of that from this Excel sheet that has been shared with you. Obviously, if the management cannot give a guidance, then it will have to disclose appropriately, and the auditors will also have no choice but to give a modified opinion. And auditors will also have to mention in their modified opinion paragraphs or emphasis of the matter if substantial disclosures are not made, and how are they relying on this financial statements, or they are not able to rely on this financial statements in some scenarios. Therefore, in each case, there is no stereotype in this case, and therefore it will have to be looked at from a case-to-case basis. What we are trying to already do is also bring out certain audit procedures or the standards of audits which will be coming into the effect post due to this impact. Obviously, the auditors will have to, there is an operational disruption, change in demand, working pattern, business operations, geographical restriction, asset valuation, all this working capital issues. We have looked at all of this risk and how do we address or mitigate this risk. Obviously, the auditors will have to identify and assess the risk of material misstatements, and also look at the effectiveness of controls in preventing or detecting or correcting this material misstatements. As I've said, the audit materiality concept itself may be will have to be reassessed. The sample size may have to be redrawn to ensure that we mitigate the above business risk. We may have to do a greater detail testing to give us a comfort on the numbers or the financial statements as auditors. Standard of auditing 560 already mentions the responsibility of auditors for subsequent events. As I've already said, the auditors will have to obtain enough and appropriate audit evidences that all the events occurring after balance sheet date have been captured, and if not, then give a modified opinion. Obviously, this going concern is also what we have discussed, but that's where probably the criticality of this accounting principle will come off. As auditors, we need to be reviewing them, obtain further evidence and information from management, including updating financial modules or documents to ensure that whether the businesses are going concern as on the next 12 months. And this is where a lot of professional judgment will come into picture. Obviously, management will try and give their side of the view that yes, it is a going concern. But is it so as on the next 12 months is what we need to see. Obviously, yeah, the disruption of 3, 4, 5, 6 months cannot be a sole reason for not having financials on a going concern. But a substantially longer period of time of 12 months is probably the right way to look at it from the financial statements or year-end processes. Obviously, we rely on a lot of the work done by experts, like I said, actuarials, valuations or other valuations. Obviously, as per the standards of audit, the auditors will have to will be relying on the these experts, but they will have to now definitely make estimate, or we have to revisit the estimates and the measurements that have been taken care of by these experts. They will have to carefully scrutinize the basis of these estimates. Obviously, they need not do the entire working, but due care will have to be taken, and the professional judgment will have to be applied on the basis of these estimates to ensure that the work done by the expert and the reliability of this expert's advice is accurately captured in the financial statements. Audit evidence, obviously, I have mentioned that we'll have to put greater reliance on third parties, obtaining evidence from third parties, and I'll come to a subsequent slide where we are trying to mention different types where you could have alternative evidences. Obviously, the auditors are supposed to it is very clearly said that auditors are not are a watchout and not a bloodhound. But over the years, we have been made a scapegoat for any of the financial irregularities that happen in our country. And to that extent, we have to be extra vigilant of any frauds. Audit being there is an inherent limitation that the financial statements are prepared by the management. Our role is to give a view on the same, or a reasonable assurance that the financial statements are materially do not contain any material misstatements, either caused by fraud or an error. And to mitigate the above inherent risks, a lot of skepticism or carrying out of extended audit procedures will be required, just to ensure that you get a clear comfort on the financial statements. And this is the slide that I was talking about. Generally, in most business consultants, we generally have physical verification of inventory. The management does the physical verification of inventory, but we as auditors or business consultants are called to overview or look or take our assistance. Our assistance is taken care to ensure that the entire process is done in a more refined manner. Obviously, due to the complete lockdown on 31st of March, there was no possibility of doing an inventory or a cash verification. So obviously, now what will happen is that what do we do for the value of stock or cash as on year end. We will have to obviously rely on cutoff testing. The records pre or post will have to be tested. The inventory movements subsequently from the date the plans start to the date you actually decide for doing a cutoff testing will have to be reviewed in greater detail. Maybe you may have to look at contracts also. You may have to look at import documents also, or shipping bills to see how the preparation of GRNs or movement of materials to do the cutoff testing. External confirmations, obviously you may not get confirmations from debtors. Generally, as auditors, we generally ask our clients to get debtor confirmations or creditor confirmations, but in maximum 20% of the cases you generally get confirmations back from your clients. Today that number could go down to much single digit numbers also. Then how do you obviously place reliance on the values or receivables which are being projected in the financial statements? Obviously, as auditors, we will have to look at the subsequent receipts or payments made post the lockdown period to the date of signing of balance sheet to come to understand the carrying value of those assets or liabilities as at the year end. Coming to another issue is obviously the placing reliance on the work of internal auditor. Obviously, we will have to place a greater reliance on the internal audit function or observations that have been raised. Obviously, the standards of auditing do not allow the sharing of working papers, but wherein if possible, you will have to request the or review the working papers with great detail, because ultimately you will be signing those financial statements, and therefore the risk of some material misstatements lies with you. This is what I have just given one of the I have extracted one of the results that was declared on 21st of April 2020, and this is how the listed entity has presented the impact of COVID-19 on its financial statement. This is available in public domain, so obviously there is no addition from my side. It's just a respective copy paste, but I wanted to show you that how this will have to be captured by us and the managements going forward. Obviously, managements will have to come out with their respective disclosures, but a similar disclosure like how this company has made that it is assessing the impact of recoverability of trade receivables, including unbilled receivables, contract assets, contract cost, inventory, intangible assets, investments, and margins on ongoing projects. Since it is declared results on 21st April 2020, therefore it has not been able to recognize a lot of this, or rather not assess the impact. Going forward, in majority of our cases, the balance sheets will get freezed or will get closed somewhere around August, September, and I don't know whether the government will be proactive enough to extend the current due dates of filing of balance sheets or holding of AGMs, which is as on the date of 30th of September 2020. But even if those are extended, and our clients will obviously want to postpone the same because they will need more time to assess the impact of all these issues. But we as auditors obviously will have to mention and definitely give our comments on the same, and maybe will definitely have to give the impact on your in the section of emphasis of matter in your audit report. And this is one of the emphasis of matter which has been given by the auditor in this concern. Obviously, this is available. So here they have said very clearly it is that the auditor has clearly said that his opinion is not modified. But you may have scenarios where you could have a modified opinion. Lastly, obviously, I would like to thank the association, the president, and my dear good friend Hiral for giving me this opportunity. I know it's a very tough time for all of us. We have never been sitting at home for such a long period of time, or rather working from home for such a long period of time. And we are all eager to go back to work from 3rd of or 4th of May. But may I request everyone to stay safe, stay at home to the extent possible. Obviously, there was a beautiful song which has which has been made by Akshay Kumar or conceptualized by Akshay Kumar during this period, and which is Muskurayega India. I'm pretty sure we will come out along with our clients after this lockdown period with greater resilience, and we will definitely come out with flying colors. Thank you so much. Thank you for a patient hearing. Thank you. So, if you have any questions, we could.
Yes. Thank you, Premal, so much. It was a very interesting learning session. We will take up. We have a few questions. Okay. The first question is from Mr. Purohit. He says, if I have investments in mutual fund units purchased at the rate of 100, but its NAV as on 31st March 20 is only rupees 50, and as on 30th April it was 65 rupees. The date of signing should be at the date of signing. Should we make provisions for rupees 50 or rupees 35?
You will have to make provision for rupees 50 and not 35. You may in the notes yet mention that subsequently the values have gone change, have been increased, but you will have no choice but to make it at 50.
Okay, thank you so much on that. Then the next question is Mr. Rajesh is asking, COVID-19 disclosure, no, yeah, that he wants them to be mailed. Okay. Now we have a question from Mr. Jatin Bhai. The government has announced for the PF will be deposited by the government for up to 100 employees. How this we have to disclose in the financial statement? How do we have to disclose this in the financial statement?
So whatever incentives have been coming in from the government will have to be looked at in the nature of with the greater detail with the relevance to accounting standard 12, which is your government grants, where you have any compensation coming in the nature of either reimbursement of expenses or an additional benefit being given, then you will have to recognize it as an income in your financial statements, and to that extent the same will apply over here also.
Okay, thank you. I think Jatin Bhai, that was well answered by him. Then next we have a question is by Mr. Joshi. Request you to elaborate on inventory valuation with reference to factory overheads and other overheads. If you can elaborate on that.
Sure. I gave an example over there, but let me further add upon it. Sir, in this scenario, what happens is generally your cost sheet would include a portion of factory overheads as well as administrative overheads, which are generally allocated to your cost of manufacturing as a part of cost of goods sold. Unfortunately, what happens is during this period of lockdown, you could have a lot of the factory overheads or administrative overheads which are not incurred, like your variable overheads. I'm not referring to the fixed cost like salary or rent. But obviously what I'm referring to is your variable cost, which obviously you will not incur. And to that extent, they cannot be allocated. And to that extent, your value of cost of goods manufactured will have to be reduced. And therefore, the standard very clearly says that it is cost of manufacture or net realizable, whichever is lower. And if your costs have been reduced, then to that extent, your inventory value will also have to be reduced.
Okay, thank you so much for that. Then the next question we have again from Mr. Rajesh is, if the valuation of machinery is considered as lower than the net value as per the books. I think you just explained about it. Is
Sorry?
that the same? If the valuation of machinery is considered as lower than the net value as per the books, what do you do in that case?
So that means that this is, thank you for raising this question, and whoever has raised this question, this is a clear example of impairment, where your value of the asset is lower than what is on the carrying. So you will have no choice but to recognize this as an impairment in your financial statements, and therefore the carrying value of asset was, say, suppose 100 rupees as on 31st of March 2019. Today you are saying that the same value is, say, 80 rupees or 70 rupees, then a corresponding effect of rupees 20 or 30 will have to be passed in the P&L to bring down the value of that asset to 80 or 70 as the case may be.
Yeah, so in this case, how would depreciation be considered? On the book value or on what basis? Like
on the impaired value,
okay.
Which is, so the depreciation will be calculated on the adjusted value of the asset. So which will be, depreciation will be calculated on 70 or 80 rupees as in my example, and not on 100 rupees.
Okay, thank you so much. And in the previous question, which Mr. Purohit had asked regarding that NAV, about that 50 and 35, further he wants to know that what if the event occurred after balance sheet? Now, as the NAV has increased, and to that extent, we should make less provision.
Sir, unfortunately, the standard does not allow you to do that.
Okay.
So,
yes, and then we have a question like borrowing cost on construction of PPE during lockdown period is not to be capitalized. So is such cost to be charged to P&L account?
obviously.
Okay, and we have one last question by our Mr. Mahesh Ji. Quickly inform the tips to resume the work once lockdown opens. I think this is very important for all of us.
Mahesh bhai, I don't think anybody has quick fixes on it. The only thing that I can think of is, I mean, I go back to my first slide, and that is maybe each one of us will have to assess how do we work from home, or maybe also look at how we can incorporate social distancing as well as hygiene in our offices. I was just reading today morning, Times of India has come out with an article which says that the concept of open offices that we have today in our offices may completely change, because there is no place for open offices now, given the social distancing that we need to follow as per government regulations. But I'm pretty sure that obviously each one of us will find some solution. We will definitely come out of this in a greater manner, because we Indians are born with the entrepreneurial spirit, and that's the only thing I can think of at this point of time, given what we could do. Obviously, this is a great opportunity for all of us, and we will definitely come out with flying colors on this.
Yes, some quick, short 2-3 questions which have just popped in. Borrowing cost on, yeah, that is done. That. What will happen to fixed cost in case of inventory valuation as factory working at lower than normal capacity?
There you don't have a choice, but it will continue the same.
Okay.
So you will
And
have to continue with that absorption.
sorry?
The absorption of those costs will keep on continuing.
Okay. And where the fixed assets value is impaired, what would be the impact on the taxability? Is the impaired value would be added back for the computation of tax liability?
Yeah, so it will have an impact on your deferred tax assets, and therefore, as I mentioned, the deferred tax, you will have to reassess whether your deferred tax asset which you are carrying in your books is required or not.
Yes, and then we have a feedback by 2-3 participants saying it was a very nice presentation. And
Thank you.
yeah. Sunilji, before we give a vote of thanks, a word from you. We have Maneshji online, that your audio, Sunilji, your audio. Yes.
Okay, now.
Yeah, okay. Yeah.
Premal, it was a wonderful presentation, really. Though I don't do the audits at all, but I was very keen on, again, hearing on this issue. Really, it was a wonderful presentation. Thank you very much. Thanks a lot.
Yes.
Thank you, sir.
Maheshji online. Maheshji. Yeah. Let me just connect him to the.
So Sejal, while we are adding Mahesh Bhai, just to interrupt, I forgot
Yes,
to
you
thank.
please continue. Yeah, Premal Bhai, you please continue. Yes.
I forgot to thank you, and so I need to really thank not only the association and Hiral Bhai or the office bearers, including Sunilji, but I need to thank you also for navigating and ensuring that all the participants get the seamless benefit of this presentation and this webinar. So thank you, Sejal, once again. Thank you.
Thank you so much. Yeah, it's a pleasure. Yes. Now we have Mahesh Bhai online. Maheshji, over to you.
Yeah, thank you, Premal Bhai. In fact, the impact of this your presentation on Indian economy is definitely going to be high, because this is a like third world war situation where we are fighting with the unknown enemy, and your presentation is going to be very helpful immediately after the lockdown period. The way in which audit is going to have the impact. Thanks to your dedication and commitment, as well as it's very hats off to you, the way in which you have given the presentation, and of course question and answers whichever has been asked, you have very satisfactorily answered those. So on behalf of GSTPAM, Sejal, Sunil Bhai, and President Dinesh Tamdeji, we are very thankful to you, and thankful to Sejal Madam also to have a webinar series very effectively. Thank you very much.
Sejal, I would like to say something here again.
Yes, sir.
See, Army, Navy, and Air Force, they fight on the borders and as well as within internal situations also. But here we see CA profession, our session professionals, they'll have to fight like warriors only again.
Yes.
So,
Yes.
Sejal, you are preparing them, you are giving the training to those people. By contact Premal को बुला के किसी न किसी को बुला के आप लोग हम लोग को ट्रेन कर रहे हो for those.
Hiral Bhai has been there. He has been there.
Hiral किधर है यार? Hiral, I was wanted to tell
He
him.
couldn't connect. Yeah, he couldn't connect right now with his Wi-Fi. There's some issues, so he would have
And
been there.
one more thing, since Premal Bhai has traveled across the globe because of in his audit tenure, so he is the right person to explain this in very lucid manner, and he knows the impact of this globally, what is going to be happen. So he is a very good choice as far as this topic is concerned. Thank you, Premal Bhai, really great.
Thank you, Mahesh Bhai. But just to, we need to also thank, though they are not part of this association or any forum, nobody is listening at this point of time, but we need to really thank all the people who are fighting COVID right now, be it our health officials, doctors, paramedical staff, and many other government offices, including all the municipal officials who are working, and police, the respective state police officers, they are risking their lives so that you and I can be safe. So we need to really thank them for this gracious effect that they are doing. And
Yes.
I really like to thank everybody for the same.
Thank you so much. Thank you, everyone. And here we
Bye-bye.
come to
Thank
an
you.
end of this webinar. Yes. Thank you.
Thank you. Thank you. Great webinar. Yeah.